Thank you for listening to episode 93 of North Star's Private Equity Fast Pitch. Our host, Jeff Henningsen, president of Lockton Companies in Houston, will be speaking with Jeff Parks, the CEO of STCK Capital Group. Jeff co-founded the company, which successfully completed its IPO in June of 2021. STCK's mission is to democratize access into growth and late-stage pre-IPO businesses, giving all investors, regardless of size, the opportunity to participate in the future growth of a portfolio of innovative and disruptive private companies. In addition, STCK's public listing provides a valuable liquidity option for shareholders, eliminating what has typically been a barrier to entry into this attractive asset class. Jeff has over a decade of investment industry and portfolio management experience, having successfully co-managed 3 North American Hedge Fund mandates. He specializes in identifying companies in their infancy and has actively worked alongside management teams to help drive growth. Today they'll be discussing STCK's mission to democratize access to growth company investments, why it's important that every investor, regardless of size, can invest in disruptive companies that aren't publicly listed, and finally, Jeff's secret sauce, how he gets deal flow and raises funds. And now your host, the podfather of private equity, Jeff Henningsen.
Jeff, it's a pleasure to have you on the podcast today. I don't get to talk to a lot of Jeffs in the business, so Jeff and Jeff, great to get kicked off. And polar opposites, you're in the frozen tundra and I'm in Texas. It's been 70 degrees here, so glad to have you on the podcast. Can we kick this off and have you tell us a little bit about STCK, what you guys are up to?
Thank you very much for having us on today. So STCK, we're a publicly traded company. We're traded on the TSX up here in Toronto, Canada. And what we're trying to do is democratize access to anybody out there, whether they're the largest individual investor, a pension, a hedge fund, a mutual fund, or individual accredited or non-accredited, where they can participate in disruptive private companies. So anybody has that ability to buy our shares on the exchange and participate in the portfolio companies that we have in the portfolio. We raised around $100+ million. We're looking to deploy that in 15 to 20 growth to late stage businesses. I'm sure a number of individuals would know. We have 3 names in there right now, which we can go into further.
And you said you're on the Toronto Exchange. When did you list?
It was recent. It was June, around middle of June, June 15th of 2021. So we're new to the market.
And why the Toronto Exchange? How did that come about?
So we're up here in Toronto. My 3 partners, we're all from close to Toronto. This is the market that we know. We're Canadian, want to start here. And then obviously as we build up, bring that to additional exchanges in the future.
Maybe take a few minutes just because I don't talk to a lot of folks on our podcast that are from your seat. Most of the guests that I have are more traditional private equity fund managers, GPs, investment bankers. Talk about the process you went through to raise money to go public on the Toronto Exchange.
We ended up hiring the 3 biggest banks in Canada. It was RBC, TD, and Scotia. And they were our book runners where they brought us to a number of individual institutions, whether it be pensions, mutual funds, hedge funds, high net worth retail brokers. We went and saw those on a long road show, raised that capital that way. So then it went into the structure that's listed on the TSX. So it's essentially a pool of capital that we'll then take and go deploy in these underlying businesses.
And is there any mix of that you could share? Obviously, as a public company, I know there's some things you can't share, but I would imagine this is public record. How's the blend of investors? Are they mostly Canadian investors in the public stock? Or are they all over the place? What's that look like?
There was predominantly a lot of Canadian investors. There were some US funds and US individual investors as well that participated in the offering. And then that broke down, let's call it around 45% institutional and then 55% retail in terms of a breakdown of the overall shareholder base.
Got it. And you use the word democratize. That's an interesting word, not typically heard or used in the private equity space, I don't think. Not that I've heard. Describe what that means to you and to our listeners.
Yeah, for us, we're trying to break down those barriers of an individual who They might be a non-accredited investor and they can't participate in the hedge funds or the private equity businesses out there that are buying some really, really interesting businesses and making significant returns. So we broke down the barriers because anybody can go onto the exchange and buy that underlying ticker, STCK, on the Toronto Exchange, and participate in these holdings within the portfolio. That's the key difference in terms of democratizing and just having a few people who can play those private equity or venture capital or PE funds.
Interesting. And so from an investor standpoint, if I own the stock, am I just looking for appreciation of the stock value? Are there any dividends? What does that profile look like?
That's exactly it. So our internal goal for our shareholders is to compound that book value per share. And as that book value per share grows, the stock hopefully tracks that book value per share. So you're looking for that appreciation in the underlying shares. In terms of dividends, I can't say won't, but most likely just keep that capital internally and compound that capital over time.
Got it. So I think I know this. You haven't ever taken a company public before. What's your background and how do you qualify to take a company public? Because obviously that's something that's important to public shareholders, kind of the background of the leadership. And maybe as a secondary question to that, tell us a little bit about your management team.
Yeah, so myself, I'm 10 plus years in the hedge fund business. So I saw a number of different IPOs, number of different companies, whether they're small caps, large caps, whether it's debt, equity, options. We played in a diverse arena of underlying securities. And my partner, Jason Myers, our CIO, he's 25 plus years at TD. He managed the internal proprietary trading pools at TD Bank. And then Jimmy Viopoulos, our CIO, he's worked in disruptive businesses his entire life. He's been in renewable energy. He was in cryptocurrency where he was the CFO of a $3 billion publicly listed cryptocurrency company. So you bring that team together and that has the public knowledge and experience to bring that company public. Also, you have to look at the board of directors and the advisory board we have behind us as well. One of our board members, he was the chairman of Canopy Growth. One other individual, Jerry Sinclair, she sat on the board of the TSX. She was on the board of TELUS, very, very large companies up here in Canada. And Laurie Goldberg, he was CEO, still is CEO of People Corp, a publicly listed company that recently was sold to Goldman Sachs. That group of individuals has a lot of public company experience and a very deep roster of companies where they've sat on boards before. All of that cumulatively is why we were able to bring this to the exchange.
Can you walk us through the three investments that you've made so far and how those came about and what maybe bite size you took in each?
Yeah, so our first capital that we put to work, our first investment position, was a company called Varo Bank. It's a neobank in the US, and they were the first and only neobank to actually get an FDIC banking license. So as opposed to having to borrow somebody else's banking license and they're sharing your margin profile, it took them, I believe, 3 to 5 years to actually get that banking license and several hundred millions of dollars. So it differentiates them versus all the other neo and challenger banks out there. In terms of bite size, that was a $5 billion position. That was in September. Our second position was Bolt Financial. We invested in them $6 million in October. And 3 years ago, one-click payment checkout process was a patent that Amazon had. It expired. So Bolt was able to capitalize on that and democratize access to the one-click checkout for all other e-commerce sites. That company is doing extremely well, where it was announced on Monday, where they just raised at an $11 billion valuation. So we doubled our money within 3 months on that underlying portfolio company. And then the last position that we have is an indirect exposure into SpaceX. And obviously that company speaks for itself. I'm sure a number of listeners know Elon Musk and SpaceX. So we wanted exposure into his organization because we really like the whole Starlink satellite network. To be able to give the world access into internet, whether you're in sub-Saharan Africa or you're in India or you're in the middle of Canada, where you don't have access to that underlying internet. It's a very, very interesting platform that he's building there. It's almost like the telco of the world. We're very happy to have our exposure for our shareholders in that one.
This is interesting as I hear you walk through those three investments. They're really pretty small slices of a greater investment profile in much bigger companies. There has to be something in your background, maybe in your hedge fund days, that has given you the skill set to find those opportunities, take that type of a sliver of investment. Is there, maybe walk us through that background in the hedge fund space and tell us about that and possibly how that even led to where you are today.
Yeah, so I always excelled at digging up information on companies where you can make an assessment and seeing angles that other people had difficulty seeing, and building the relationship with the management teams and pooling all that data together to come up with an investment overview of a company where we could actually take that capital, put it to work, and then hopefully monetize it at a 1 or a 2 or a 3x return. So I was always really good at sifting out that information and just seeing different things that people generally couldn't see. And that was my background for 10 plus years on the hedge fund side. And I'd actually work hand in hand with Jason Myers, who sat on the opposite side of the street as me, our CIO, where we would work together on investments, him on the sell side, myself on the buy side, and find these underlying opportunities. And I love doing it. I wake up on Saturdays, my wife's still sleeping, and I'll be down on the couch just screening for different companies and trying to find those opportunities that we can put capital to work into.
So it sounds like it's almost, one of those scenarios where, you find an area that you love so much and then can make a career out of it. It's a win-win. Maybe not for your wife. She might hate you on the computer all the time, right?
I do it when she's sleeping, so I can get it in there.
That's awesome. Tell me, interesting, the last months I've had a couple different folks that have either been full-time in the hedge fund world or took a stint in the hedge fund world like you did for 10 years of their career. For our younger listeners, talk a little bit about what that looks like. Were there any surprises when you went into that space that you weren't expecting? How did you even get into the hedge fund world?
Yeah, so myself, when I was in university, my brother, he was actually in the hedge fund space. So I always looked up to him, saw the different businesses that he was investing in, management teams that he was sitting down with. And I always find that fascinating because no day is the same. You could be looking at a fertilizer company one day. You could be looking at a software company the next day. You could be looking at an auto parts manufacturer. That's what's so appealing to it, because you can dip your toe into all of these different industries and you can talk to management teams and sit there and say, what's working in your business? What's not working in your business? And I love talking to people. I love understanding their business. As a kid, there was a show called How It's Made, and it would bring you through like factories and how all those components were made. I love that stuff. And I loved sifting through information where if I work harder than the next guy and I can find that information and assess that company, well, you can capitalize off of that. So a lot of it's just a lot of heavy working in terms of going through company financials, meeting people, having them direct you to different companies. And you might be looking at one company, all of a sudden they direct you to a different company, which you find fascinating. You could potentially make an investment. So it's a lot of legwork in terms of finding information and working harder than the next individual.
So it's interesting what you just said to me tells me that one of my favorite quotes, I've said this probably too many times on my podcast, but one of my favorite quotes of 2021 was one of my guests who said, Jeff, grinders win. It sounds like you're just a grinder. And I would imagine the hedge fund space, it's almost the equivalent of being at the professional athlete level where the winners and losers stand out really quickly, right?
That's the thing. If you're putting in more work, if you're reading more company transcripts, talking to more people, you're getting more information than the next guy. So you're exactly right. You're grinding your way to more information to make an assessment of a company to capitalize on it.
Let me transition a little bit, although we're kind of in the same world of research. Talk to me about deal flow. How do you find these windows of opportunity where you can take that small of a sliver of investment and where does that intersection happen? Because a $5 million investment is a fairly small piece. So where do you even get that access and where do the new ideas come from?
So there's two pieces. We'll start off in your secondary trading market and what's happening in the private world. You're seeing more and more secondary transactions happen because the way that the business was set up on the venture capital and private equity side, everyone has a fund life, whether it's 6 or 7 or 8 or 9 years. When that fund life comes to an end, LPs need liquidity. So those venture capital or private equity funds, they'll start liquidating those underlying positions. Or what could happen is an individual venture capital or private equity fund, they focus in on seed investing. And then we're going to get to a Series C and Series D. They'll probably want to recycle that capital so they can take it back into seed investing, where we can come along and we can sit there and bid for underlying positions. So that's the secondary market terms and trading. In terms of primary markets, it's basically going back to what we were talking about before. It's grinding your way into some of these deals where you're building relationships with people, and you might be looking at one company and all of a sudden they talk about another company and they're saying, oh, my friend's raising money over here, you should take a look at their company. So now you're in that data room, and it just spreads out where you're talking to so many different people and in finding these opportunities. So I wouldn't say there's one clear cut way to do it. And we even have companies now that are coming to us saying, hey, we're raising a series XYZ. We see you're invested in Bolt, Varo, and SpaceX. Like, we would like to be in your portfolio as well. So it's that whole network effect, and we see it happening day after day. It also helps too, being a public company, when we put these press releases out there that we're invested in XYZ, people all of a sudden, you start getting more and more inbound interest.
I saw something on your website that I thought was a really cool graphic, and it related to the venture capital world and kind of the cycle of that. You mentioned Fund C, Fund D. The thing that caught my eye was the Valley of Death, which I thought was really cool. Talk about that, because I think now that people have seen shows like Shark Tank, they're starting to kind of understand that it's not just, go raise some money and you're like a wildly successful, and everybody's got a great idea. Even on your website, I think mention, Fund DEF, maybe, further letters after that. For listeners that aren't quite as familiar with that venture world and where that sweet spot is, can you talk through what happens in a Fund A or B, C?
Yeah, so that chart you speak of, if you break it down, you have your seed investors first, then you have your early stage investors, and then your growth stage, and then your late stage. The seed and early, that's where you don't technically know whether the company is going to make it. You're going to put some risk capital in there, but probability is probably not working in your favor as to the company succeeding. Granted, your return profile can be very, very large. So we're trying to steer clear of the seed and early stage, because a lot of the companies, they don't have proven product market fit. And what I mean by that, the company doesn't totally know whether the underlying product is going to sell into a market. Where we're focused is on that growth and later stage, where we can be that capital, whether we know the underlying company, we know that the product is selling or the service is selling. So we're that growth capital where they can inject that into a sales force and propel that top line higher. It also reduces your risk profile, because you know that there's probably going to be some success in that underlying business versus the early and seed stage where the probability is not as much in your favor.
And I think on that chart, you called it the investment sweet spot.
It's the investment sweet spot for us. We're the late stage and growth stage guys. We want to stay clear of that valley of death you spoke to.
Jeff, as you're sitting on the couch while your wife's asleep, grinding for all these different opportunities, what types of themes are coming out? What are you seeing as opportunities in the future?
I think one thing's a number that stand out. One of the top on the list are travel and leisure companies. And I'm sure you, maybe less so in Texas, up here in Canada, everyone's dying to get down to a beach and go on a vacation. So I think in the travel and leisure space, you're seeing some opportunities where you can buy now, where in 2 to 3 years, that pent up demand that's going to happen is going to be very, very valuable to these companies. So travel and leisure is on the list. I would sit there and say content creator tools are on the list, where a number of people call it the quit mass resignation. These people have left their jobs and they're starting new businesses. Well, they need tools to help them with their own content creation or their own online profiles. So we think there's some interesting companies in that sector. I'd also sit there and say in the cybersecurity sector, where, Jeff, if you want to open up a crypto trading account, well, how do we verify that you, Jeff, are on the other end of that phone? So there's some interesting fraud detection, cybersecurity companies that we're looking into as well.
I've recently heard the term revenge travel, which must be a Canadian theme or something like that.
It definitely is up here.
What's your thoughts? I don't know if you've looked at the cruise lines, in particular, Lockton actually has a fairly big footprint in working with those firms handling their insurance. But it seems like that's going to be a really big industry because it's a low entry point to a travel option for people. And I know a lot of Canadians do cruises as well, but those stocks have just been beat up significantly.
I don't think they're going to go back to their all-time highs of where they were before, just because the dilution that was brought in, because a lot of those guys had to do equity offerings that were significantly below where their obviously high stock prices were. So that dilution, I think, really hurt them. But I think that business, it's bound for a bounce when everybody wants to go on a vacation. To your point, easy entryway to either get down to the Caribbean or over in Europe, and that's an easier way to travel. I think there's going to be a lot of demand for that coming up in the next 2 to 3 years.
So we talk about travel and leisure. What do you do when you're not doing your research on the couch and Saturday mornings and all week? But anything that you do for fun?
Myself, I'm an avid golfer. I love to ski and snowboard as well. That's fantastic to me. I'm also big into skeet shooting. I've always loved to go clay shooting. So learned that down in Colorado one time when I was on a due diligence trip, and I took it back home, and I like doing that on weekends as well.
That's awesome. Your golf game probably in Canada runs a 3-month per year period.
Exactly. Four to be generous, but yeah, it's definitely a tight period. Sometimes you can see us golfing in November when there's a sprinkle of snow.
That's right. Is there any discussion around crypto? That's something that's really interesting to me, but it's just interesting because I don't understand it. And if they'd shut down Bitcoin, cybercrime would stop. But
my CFO is the best at that stuff because he comes from the crypto world. Like I know, like kind of like high level. It's definitely an area we want to explore, and we are exploring in terms of underlying opportunities. Because you see some of the businesses that have come to market, and you're talking big exchanges that are doing billions of dollars with very, very high margin profiles, or you're north of 50% on EBITDA margins. There's some very interesting and attractive companies that are US based that are on our radar for that sector. I think there's, in terms of the whole NFT business with people trading digital JPEGs, I think there's interest in the underlying technology of the blockchain and those non-fungible tokens. I think there's going to be some hurt in regards to people buying these JPEGs and realizing, well, what am I supposed to do with this? How do I actually capitalize on that? But there's definitely some pockets of very interesting companies we're exploring.
The NFT world, to me, and I'm not super familiar with it, but it feels a little bit like maybe the A round or B round investment stage right now. There's going to be a valley of death for some of those.
I think there's a big valley of death for some of these underlying pitchers. I'm not sure I want to put my money to work in that right now.
Maybe my kids can draw some pictures and go sell them on this market right now.
There's even some content creator platforms that you can actually go on and create those pictures and then put them on, whether it's an OpenSeas or a Nifty Gateway, and start selling underlying pictures. It's the Wild West.
You talked earlier about getting to know management teams, getting to know companies. In your world and in building relationships, is that mostly on the phone, through Zoom, trade shows? You know, obviously we're in COVID right now, locked down a little bit, but what's that look like in a more traditional time, outside of the COVID lockdown?
Yeah, so like to your point, like in COVID lockdown right now, you're Zooming a lot of these companies, which is actually somewhat nice. Like if you're in a conference or even going back to our IPO, that was very, very beneficial for us because you could go back to back to back to back in terms of meetings, as opposed to you're traveling from city to city to city and you're shortening those meeting times. But in terms of management teams and speaking to them now, yeah, a lot of it's done on Zoom. We do have some actually come into the office where we can speak to them now. But a lot of it, when we get out of a lockdown, because we're in lockdown up here, going out, traveling to those cities, and before you go, you'll sit there and say, okay, how many management teams are in that area? How many can I have meetings with? And then obviously start building those relationships in person, because there's a big difference of reading a person's body language and getting to know a person when you're sitting across a table with them versus on a Zoom.
We talked a little bit about your work history, but as a kid, have you always been a grinder? What were you like growing up? Did a switch turn on at some point in your life?
I've always kind of been a grinder. Like one of my first jobs as a kid, I worked on a golf course. I mowed the greens on a golf course and raked bunkers. That was getting up at like 4:30 in the morning before all the golfers would get out there, grind my way for 4 hours before they come on the golf course. Been since an early childhood, and I watched my dad. He was a dentist his entire life. He put in a lot of hours, so realized that if I put the hours in, I can be extremely successful.
Does that lens of what you just said play at all into investing in certain management teams? Are you asking questions and looking at their history all the way back to when they were pre-K or middle school, or what are you looking at there?
You try to figure out, okay, what did you like as a kid? We'll even go through just different Instagram profiles to see what do they do today? What are their passions? Is that the same thing they tell you in a meeting versus back checking them in different channels? So we do a lot of work on those individuals, and we're okay investing in quirky individuals. That's totally okay with us.
You led me right into a question that I ask every guest: is advice to young professionals, college students that are looking to grow into the financial world, whether it's private equity, whether it's investment banking, whether it's hedge funds. And I'd love to get your advice to them, but also you mentioned something I don't think I've talked about. You're going to be my 92nd podcast. I haven't talked about it on any of them, is this internet stalking. You're looking at the profile of somebody and the benefits or dangers of, what you're posting as a young person who grew up in the internet world, as opposed to, fortunately, nobody was looking at pictures of anything that we did as in college as you're applying for jobs. But what advice would you give to young professionals going into the space, academic, work-wise, and then maybe blend in, they need to be careful with in the digital world?
I think obviously one of the biggest things is obviously your marks are going to matter. And your marks are going to matter if you want to get into those top investment banks and those top private equity firms right out of school. But also, like, the biggest thing, in my personal opinion, what matters is the underlying person's passion and their personality. And at the end of the day, coming out of school, you're not going to know everything that happens in that investment bank. It's going to be a lot of on the job learning. So having that persistence, that passion, and that outgoing personality, I think outweighs a lot of other attributes. And it's that whole networking as well. If you're building relationships and you're networking with this individual, you're probably at a higher probability to get one of those underlying jobs than the next individual, because you're doing the legwork, you're doing the grinding. And then in terms of like the whole social media, kids coming out of school, like, you have to be very careful as to what you're posting online, what pictures, having an open profile. It's all said and great when you're in school, when you're partaking in some of those activities, but realize that you're going into the open world where people are going to look at that. And we're going to go into your social media profiles, and a lot of other people do as well. So you have to be very cognizant of what you're putting on there.
Yeah, I've seen scenarios where really it's not age relevant, but people who have a very strong opinion about anything, whatever it is, sometimes that gives you kind of a pause of how are they going to react and respond and work in your environment. So it is a very interesting scenario. My mother worked for the Air Force, and she always used to say, how you dress. She never wanted to wear something that would detract from her message or her knowledge. So she dressed very like the Air Force military would. I talk a lot about that with some of my young professionals. You walk into a room, you want them focusing on your brain and your message and your work ethic, not that you've got a really crazy tie on or really crazy socks on or whatever it may be. Trying to fit into that box, which a lot of young professionals don't want to fit into, but sometimes they detract from their upward mobility by doing that.
Totally agree on that. Even with the whole workforce changing these days too, and trying to track talent and what's going on out there with one of our companies, like Bolt, for example, Ryan Breslow, he changed his work week to a 4-day work week, which I actually think is really good, because if you're going to grind, you're going to do all your work in 4 days, and you have that 5th day off where you can either spend it with your kids or in a different hobby or whatever it may be. You're definitely seeing a changing landscape in the employment industry, because it's very, very difficult to attract talent right now.
It is. What's interesting to me is publicly stating that you have a 4-day work week. I haven't really thought about this until we were just talking about it, but typical grinders, even if you have a 4-day work week, they're not going to do 4 days.
You're probably working the fifth day as well, somewhat.
Yep. Exactly. For a young professional at one point in COVID lockdown, in the new world of remote work, talking to somebody the other day, and they made a really interesting point of, you're a young, aspiring grinder type personality. Now's the perfect time to actually be in the office. Or when, if you're in Canada, like you're in total lockdown now, Texas is starting to come back. Most of the senior folks are in the office. And this was a private equity person from New York, but he was talking about how this is really the opportunity to have unfettered access to the senior folks of the firm. While you don't have 100 20-year-olds in the office, you might have one. And so if you truly, want to build your career and learn, which a lot of the learning when you're younger happens by osmosis, by just being in the room and listening to the patterns. Any advice in that area for young professionals?
I think you hit the nail on the head right there. It's all learning through osmosis. You being in that room with, whether that's an MD or director or whoever's above you in your organization, and learning how they speak, what companies they're talking about, what numbers they're focusing on, like how the business really works. You're much better off in that office, especially right now. I think it's a huge opportunity. That's a great point that you're bringing up, where you can capitalize on the time of those senior individuals who are in the office right now, versus there's a lot of people who just, no, I don't want to go in the office. Like, I think we're one of the few people right now who are actually in our office in Toronto. There's very few people in the downtown, but having that collaborative environment is very helpful when you're trying to think through different ideas or just get different work done.
Yeah, you mentioned your passion for golf, and I kind of think about, if I had the opportunity to play around with a professional golfer, think about how, or listen to how they approach a hole or a certain shot. You're just quickly learning things that if you're just playing golf by yourself on a golf course and then having somebody remote in some things, you may not improve as fast as you would spending time with a true professional who spent their entire career doing what they do.
Most definitely. And that's even how myself, when I entered out of school, coming out of school and going into the hedge fund world, I went directly into it. I skipped the whole investment banking, private equity. I was lucky that somebody took a shot on me, liked me enough, saw that I was a grinder, saw that I had passion for these underlying companies. And sitting there every day and learning through osmosis of how my partner, what he would pick stocks and look at companies and look at fundamental research, that was very imperative for where I am today.
Yeah, started the podcast. I gave you a heads up that I'd be giving you an opportunity to kind of give some final words. Why don't we go to that now and let you do that about Stack Capital Group?
I feel like this is an overused word right now, but like the whole actually democratizing in the investing landscape, where a lot of people, whether you're accredited, generally non-accredited, don't have access to opportunities that we're providing the underlying market. So I think that's a very important differentiator, where we have a different model, we have a different structure than anybody else has there in the market, that people can participate in companies that they generally can't participate in. I think that's the big differentiator versus everybody else out there. And even had like a number of people even hit me recently based on our last press release of Bolt raising around. They're like, wow, I can participate in that. It's like, yeah, that's why we built this platform, so that anybody, no matter whether you're the biggest investor in the room, be it via a pension, or the smallest individual who's not a accredited investor, anybody can participate in these disruptive companies.
Jeff, I really appreciate the time we've spent today. This has been very interesting. I think our listeners are going to very much enjoy hearing this different area of investing, and maybe some of them might even have an idea for you to share. So I really appreciate it, and good luck to you in 2022.
Thank you very much for having me on. Good luck to you in 2022 as well.
Thank you for listening to North Star's Private Equity Fast Pitch. For more information about Fast Pitch or North Star's boutique heavy hitter events, you can visit us at enorthstar.com.